In this day and age, it wouldn't be unreasonable to assume that Lucid Group is one of the hottest electric vehicle stocks available on the market right now. Having soared 46% in October, the company's shares have now soared an incredible 43% in only the month of November. As of this writing, the business has a market value of approximately $78 billion, easily surpassing Ford and placing it well ahead of NIO, which has a market capitalization of $51 billion. It's easy to understand why some investors are already concerned about Lucid's future, even though its path has been spectacular. Some have referred to the company as a hyped stock. The company's electric vehicles, the Air, are certainly generating headlines, but the business has just recently begun selling the Air and has yet to scale up the figures. After all, it's impossible to overlook a firm that is widely regarded as a serious competitor to Tesla. Bulls and bears are fighting for control of the LCID stock market right now, and you should thoroughly research all sides of a story before making a decision on whether or not to purchase Lucid. They have a lot to say about Lucid bulls, and that's what we'll be discussing in today's video. So stay tuned till the end. Welcome back to NewVehicleMedia, your go-to channel for EV stock. Quick reminder that subscribing's free and liking the video will help YouTube suggest similar content. Comments are loved and featured in our upcoming videos. It's estimated that Lucid Motors is worth $78 billion on the stock market. With an order book of $1.3 billion, the firm has reservations for over 17,000 cars. When it comes to raising money, the American automaker isn't like many other electric vehicle startups, since it has billions of dollars in cash on hand. Furthermore, the firm manufactures its own batteries and powertrains. It's impossible to dispute that Lucid has a lot to offer in terms of positive aspects. By the middle of November, the Air had won Motor Trend's Car of the Year for 2022, bringing the level of optimism to a new all-time high. The popular magazine believes that constant advancement of electric batteries, motors, and charging is the way ahead for EVs, which is also why it selected Lucid Air as the winner of its competition. To put it another way, Lucid designs and manufactures its own battery systems and powertrains in an effort to create more fuel-efficient automobiles with fewer and smaller batteries. In reality, the business provides battery packs for the Formula E Racing Series vehicles. Thus, the company's electric vehicle battery expertise is absolutely worthy of consideration. The possibility of having a cheap electric automobile that works on the same battery technology that powers Formula E racing cars is a fascinating concept that just cannot be ignored. To be sure, a mass-produced vehicle is still some years away, and the company's initial vehicle is prohibitively pricey, costing $169,000 for each machine. Despite this, investors were eager to assess the prospective demand for Lucid's yet-to-be-released models based on a single figure provided by the business in its third-quarter results announcement. CEO Peter Rawlinson's firm has a long way to go, but the year 2022 might be the year that determines whether the firm will succeed or fail. Initial sales figures are now available, and the company has 3 product releases planned for next year. The business also has intentions to expand outside of the United States, including beginning delivery in Canada. In addition, the year 2022 should indicate if Lucid will be able to debut its much-anticipated luxury SUV, the Gravity, in 2023 as planned. A lot is riding on the startup's ability to deliver on its ambitions, and the price might soar if the company is successful in even a part of its goals. That's how growth companies act, and Lucid already seems to be one of those growth stocks that has the potential to become multi-baggers in the foreseeable future. Because of their high valuations, LCID continues to be high-risk, high-reward investments at the moment. The stocks of the EV are particularly susceptible, especially if the market continues to decline in the future. In order to maintain their exorbitant valuations, the corporation must consistently outperform the market in terms of profits and sales growth over the long term. Even though it is a high-risk, high-reward wager, Lucid is still a favorite with investors and is seen as a superior investment. While the business has strong financial footing that will allow it to manage this capital-intensive business with sufficient financial freedom, its investors will also continue to support the firm as it expands and becomes more successful. For instance, pre-orders are steadily increasing, with the most luxury vehicle that they offer now being the most popular choice among customers. At this point, the LCID stock price seems to be on an incredible roll. There's no reason why the corporation can't achieve even greater heights in the future, given all of the variables in its favor. Because of the general state of the economy, there is a possibility of a market correction. If the stock of LCID declines in value, investors may consider it to be a purchasing opportunity. In the short run, it is practically difficult to forecast what will happen. The stock market is now being influenced by a wide range of macroeconomic factors. Investment decisions are continually influenced by factors like supply chain difficulties, inflation, and the introduction of new variants. These difficulties have absolutely nothing to do with the company's long-term prospects. Despite this, high-beta companies like LCID may be wiped out in a matter of seconds. Short-term forecasting becomes very difficult as a result of these factors. No one knows whether or not the LCID stock will be able to maintain its upward trend in the near run. In the long run, however, the Lucid Group's prospects remain excellent. But Lucid's stock price might be adversely affected by more than simply the prospect of multiple compression due to an increase in interest rates. It is probable that the economy could slow down, which might have a negative influence on the stock and the underlying revenues of the business. Instead, if the post-COVID rebound is replaced by stagflation, that is poor growth combined with high inflation, or even simply quasi-stagflation, then equities as a whole may suffer a downturn in value. Lucid is not for the faint of heart. Even though it is a competitive industry, it's important to remember that electric vehicles are still in their early life and account for just a small proportion of worldwide car sales. Lucid has gotten off to a strong start with its intriguing Air sedan that delivers a bang. This startup will have to work very hard to live up to investor expectations, not just in terms of how its future models appear and function, but also in terms of sales, service, and most crucially, growth in a market that is only going to get much more competitive in the coming years. This is an EV stock you should consider investing in if you're prepared to take a risk. Otherwise, you might want to look at the big firms that are investing billions to get a foothold in the EV industry. Which sort of investor are you? This is something I'm interested in finding out. When you see an opportunist stock, are you more of a risk taker or more of a cautious investor? Also, how would you determine the value of LCID based on the risk-to-return ratio? Is it a bull or a bear for you? Let us know what you think by leaving a comment below. Indigenous Earthling expects that Lucid will sell every vehicle they produce, but it is also true of the majority of other electric vehicle manufacturers. The key concern is whether or not they'll be able to produce enough cars at a high enough profit margin to pay their operational expenses. It took Tesla almost 10 years to reach this point. Although he's optimistic that Lucid will be able to get there quicker, he doesn't anticipate them to be profitable for the foreseeable future. Spot on. There's no question that they will remain unprofitable for a few years, but their projected financials suggest that the firm will become profitable by 2024 or 2025, which, if achieved, would be a tremendous accomplishment. That should wrap things up for today. Keep in mind that subscribing's still free and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.